Very good morning. It's Mark here. It is Thursday, February the 13th, 8 a.m. Eastern, 1 p.m. GMT. Let's see how the markets are positioned going into today's US session. US dollar index, as you can see, sold off early in the Asian session, which starts the new trading day. We had a sell off, then a fight back. It's left us wick behind, and that's the European session. Now we'll see how the market behaves in the US session. But sitting in a relatively tight range here, and it has been for quite a while, between 107.50 and 108.37. There will be an important data release today, PPI, Producer Price Index. That's in half an hour, 8:30 Eastern, and I'm sure that will move the market. Perhaps not to the same extent that we saw the CPI data release yesterday, but I do believe the market will be watching and waiting, and let's wait and see how the market reacts. Let's have a look at the S&P. Also sitting in a relatively tight range, similar to the way the US dollar index has been also in a range as opposed to in a trend in either direction. Here you can note the descending trend line, and you can see a sell-off for the last 2 days, even though there was uh, a fight back during the US session yesterday. Well, let's see how that works out today. Bear in mind that Wall Street opens up in an hour and a half, and at that point, we'll already have some type of guide from the US dollar and how that performs following the PPI data release. Let's have a look at gold. Yesterday, we saw a sell-off in gold. Look how during the US session, later in the US session, particularly, how buyers fought back in the US session, came back to that 2,900 level, and to start today, already higher and sitting at 2,916. If you're going to look to join this uptrend, always look, I think, to go to the shorter time frames and look for your signals there, and then you can join as opposed to just jumping in. I think you have to look for an opportune time, and you can see that on the shorter time frames where you can identify stop loss levels and entry points. Let's have a look at oil. Brent oil has really had some huge moves. Have a look how it's carrying on today. We had this real strong downtrend, which started middle of last month, middle of January. Then we saw the fight back, and then in 2 days, it's come all the way back down and tested and broken below, as we speak now, the $74 level. I did put in, because I think it's interesting, my Fibonacci retracement tool from this recent downtrend, the preceding downtrend, all the way from up here, 81.80, down to the low support at 74.06. And when we got the retracement, these three green candles, have a look where it got held up. Exactly at the first fib retracement level, the 38.2% level, and that's at 76.97. So there was the downtrend. There's the fight back. We're never sure if the retracement is going to turn into a full reversal. The first fib retracement level is a good signal to work on to see the strength of the retracement. And it certainly worked there, exactly reached that level, and it's come down since. So as I always say, it's not a matter of whether the fib retracement tool works. It does work. It's just a matter of whether one chooses to use it in their trading strategy. Let's have a look at Bitcoin. Bitcoin pretty much sideways. Look at all these dojis. And then with a bit of movement, you've got a green candle, a red, a green. So far today, a green. It's a sideways trend. It's trading within this pretty much a $4 range between 94,000 and 98,000. So now it's to wait for it to get to either resistance or support, buying on support levels, selling off resistance levels. But at this point, neither buyers nor sellers have been able to identify or set up a real trend. So sideways and range trading looks to be the order of the day for Bitcoin at this point. Good trading, guys. See you at the end of the day.